Did you know there are 9 states in the United States of America that have no income tax? Do you know how different your situation could be in a lot of cases if you were not living in a state that had income tax? Or maybe you make sure you're living in a state that has at least small income taxes. Places like California, New York, New Jersey, Minnesota, Oregon, they have like unbelievably high taxes. In California, it's over 13%. The other ones that I mentioned are close to 10% or over. So you're talking about a huge difference. I mean, just look at it in terms of $100,000. Okay. I live in one of the 9 states with no tax. You and I both make $100,000. I have $10,000 of disposable income than you're going to have because of state tax. Now, I understand a lot of times we live because that's where our job is, or we live because that's where our family is. And I'm not saying those things are not intrinsically very important. But I do taxes for a living for people. And sometimes it just shocks me how much more people who live in high tax states or even mid-tax states pay more than the rest of us do. And it is something to consider when you're looking at your overall life plan. Did you also know that when our federal government gives us tax breaks, the states can opt out of them, okay? They can decouple themselves from those tax breaks. For instance, when to help small businesses, the government gave us bonus depreciation or Section 179 depreciation that would allow a small business to curb their taxes for the year. California said, yeah, no, we're not doing that. And they're not the only state. This year, we've got a new deduction for seniors for $6,000. DC and other states said, yeah, no, we're not going to allow the additional deduction. So how does this affect you? Let's just say, let's take that 100,000 again because it's easy, and you do your standard deductions, and you're a senior, and now you get to take an extra 6,000. And maybe there's other benefits, like some states are saying we're not even going to allow the increase in standard deductions. Okay, so they're not going to follow along with that. So you get your taxes done. You're only paying taxes on, say, $60,000 after all your deductions federally. And then you see on your tax return that you're paying taxes on $80,000 or more on your state. You're like, why isn't it the same? It's because your state decoupled from these tax benefits. So all I'm saying is when we look at life, when we look at our financial situations, when we're trying to get ourselves in the best place possible, imagine if you could save that 10% for yourself, for your future, for your family, for your dreams, instead of just giving it to your state because, well, somehow I was born here and I ended up in this state, and you weren't paying attention to what the tax ramifications could be. Maybe it's time to make a life change. Just something to think about, some information to give you. And I hope you have a wonderful day. This is Candace Sunny with JC Castle Accounting. This is Commuting with Candace, my videos I put out to try to give you as much information as I can about anything to do with tax, accounting, or startups. Check us out on jccastleaccounting.com and subscribe below so you can keep up on all the information I bring you. Have a wonderful day.